Hi, welcome to 5-Minute Financials with Jack Driscoll. Invest 5 minutes of your time with me to improve your financial well-being. Now, in talking with corporate taxes, we also now have, what if you're not a corporation? What if you are what we call a pass-through entity? So you're doing business, but you're doing business on your own or as a sole proprietor, subchapter S corporation, limited liability corporation, LLC, may be taxed as a partnership or sole proprietorship or subchapter S corporation. What happens to you? Many questions are being asked of us to, should we now, because corporate tax rates went to 21%, and we're in a pass-through business, which means our corporate earnings, even if it's a subchapter S corporation, flow through to our individual returns, and we pay taxes at our individual tax rate. Should we reform to become a C corporation and keep those taxes separately identified as a corporate maximum tax rate of 21%? The problem with that is when you form a C corporation, your taxes get paid at the corporate level. The corporation pays the tax on the earnings, on the profits. But then if you want to pull the money out of the corporation, you do now have, in essence, a flow through because it comes onto your personal return and you pay tax again on whatever money you pull out at your personal tax rate. So that could cause a form of double taxation. This double taxation is something we've worked for years and years to avoid, which is why so many people went away from C corporations, which was why so many owners went away from that and began doing partnerships and subchapter S corporations. Even LLCs, you need to find out how you're being taxed. When you formed your LLC, it's typically not taxed as its own entity. Most LLCs that we run across have elected to be taxed as either a partnership or a subchapter S corporation. So look at your own papers and you might see that you're actually a pass-through entity. If you are, there are some benefits in this new tax code. One of the benefits are, as long as you're not in an exempt class, and I won't, classification of business, and most of you won't be, up to 20% of your gross earnings from your company, when they pass through to you individually, 20% of the earnings will not be subject to tax. That's the general rule, and that's also a huge benefit. So the government was trying to help offset, because the corporate tax rate went down to 21%. What about all the non-C corporation small business owners? And there's your benefit. One of your major benefits is in a pass-through situation, 20% of your income will not have to be taxable. That's the new provision, and it's huge. So I wanted to share that one with you. All right, we'll be back again with some more in future segments. You want to keep in tune with that, and I'll get in with the corporations. But that's a general summary for you. Remember, it only takes 5 minutes to improve your financial well-being. Check back soon for more 5-Minute Financials with Jack Driscoll.